Good morning. So what we did yesterday is we ran through a general scan using FinViz, starting out with the higher time frames, starting out with the big sectors, breaking the sectors down to industries, and then how to filter down based on volume, average true range, so you have a decent amount of volatility depending on your time frame, volume obviously for liquidity, and then we sorted a little bit more from dollar range that you were comfortable trading. And quite honestly, from a margin perspective, you can't trade all stocks. Which actually, it's an interesting thing to bring up. There is, I've seen many traders jump into options in more expensive stocks just because they couldn't trade more actively the expensive stocks with the margin that they could afford. I can't stress enough, options trading is a dramatically different business than stock trading. So if you're going to decide to jump into option trading because you can't afford the stocks you'd like to trade in stock trading, do some serious research on options trading because it's not the same thing. When you factor in the time decay, it is a very, very different thought process to be right within a certain amount of time. So what I'm going to do is I'm going to look at each stock in the Dow based on the net change from yesterday, and we're going to do something a little different. We're going to start out with the weekly chart, go old school, drawing trend lines. We're going to go down to the daily chart with the 20-period simple exponential moving average and a 50-period simple, just to get an idea of how I would be eyeballing it very quickly. And then we're actually going to go out to just looking at the last 2 to 3 weekly candlesticks. So the weekly candlesticks, if you listen to the recent Traders on Fire podcast, Rob Smith did a phenomenal job about discussing time frame continuity within the most recent candlestick. So we're not going to go out to the monthly time frame as he did there. We're just going to look at the last 3 and see if there's an edge. And really, essentially, what it boils down to is we're going to be trying to define, do we have an edge in order to put a stock in our game plan in the first place. And then the game plan would be the second part of it, where we actually plan out how we would trade it and what we would expect to happen off the open. All right, so starting out in the weekly charts on 3M, you can clearly see here most recent price action is pretty parabolic, for like way of putting it. But if I'm game planning it now, just using pure charts, meaning no moving averages or any indicators or anything like that. If you follow Trader Vic's, VICS, Victor Sperandeo, his very, very famous book, How to Make Money on Wall Street, this is a textbook consolidation here, which could potentially lead to a change of trend. But we go down to the daily time frame. You'll see yesterday had some really, really solid volume and a really good trend day. So we're not really going to call anything here other than the fact that there's nothing to do. You can clearly see we've been in about a 3 or 4 week trading range, and there's really nothing to do until we get out of this range. So we really have to clear the 170 on the longer time frame charts. However, the point here is if you're mapping out from a higher time frame down and doing top down analysis, it's an uptrend. There's no reason to believe it's any type of short sale whatsoever, especially with yesterday's price action. However, is it a good trade? Yes. Is it a good trade now? No. It has to clear this level first. Daily charts, you can see it even more clear. Both the 50 simple and the 20, both going sideways. Nothing to do there, and you can get a much better view. Looks like the resistance is more around the 168.50 level. We cleared this once, but pulled right back in. So 168.50, 169. In my vernacular, I'd probably do nothing until it cleared 170, just around that figure. So nothing to do there. Breaking it out on the weeklies, actually getting a much different perspective here to give you a much better idea that there's really nothing to do here, because we have an inside week followed by what is almost an inside week, and actually prior to that was another inside week. So almost had 5 weeks of inside candles there. So very clear there from a weekly basis. Very difficult to be trading this stock. Yes, we had a pretty decent day yesterday. We can see we had almost a $4 trading range, it looks like, but nothing to do there. So I would stay away from 3M until we cleared that level. So good stock, not the right opportunity right now. That's the big thing. Shooting out to Apple on the weeklies. Again, let's stick with old school trend lines. Very, very clean trend line here. Most likely be looking for it to pull back to this 117.50 area. This is actually a pretty good illustration here of a Fibonacci technique that's not really discussed that much, that I think is a really cool one, where a lot of us understand that if you're using Fibonacci's, you look and you're looking for a pullback. So let's just say, for argument's sake, keep the numbers simple, 75 to 135 from this point to that point, essentially $60. Half of $60 is 30, so a 50% pullback, which is kind of a standard Fibonacci number, would be $30. So 135 minus 30. Now I'm getting that. Just I got to back up for a second. 75 to 135 is $60. Half of that, which would represent a 50% pullback, would be $30. So 105 would be the pullback, and that's essentially where it pulled back to. Now what's interesting here is if a stock does not pull all the way back to where you expect it to, or where it actually holds a higher flag in this case, that indicates strength. So the deeper the pullback, the less strength you can consider, and trade less aggressively on the next rally if you're even going to trade at all. If it's the best opportunity that you have on the board, fine. However, if you have a rally and pull back shallow or even go sideways, that's an indication of institutions supporting the bid. And we're actually seeing that here in Apple because we did not pull back to the trend line here. We actually very cleanly held well above that. So I'd actually be looking to be long Apple. This is a pretty decent bull flag here. Let me just draw that really quickly. Which is kind of cool. So we're actually breaking out of the flag. So a lot of reasons to be looking at Apple today. Let's take a look at it in the other time frames. All right, we actually get a nice little kiss of the two moving averages here. And yes, again, I am using an exponential 20 for the faster time frame. The shorter time frame, it is simple just because I just want to know the longer time bias. We held this level here twice, so you get a little different view on the weekly, holding a trend line versus this here. Very good push yesterday, maybe a little resistance at 129. And then if we go out to the weeklies, inside candle breakout. Wow, there's a lot. Oh, this is really cool. There's a lot of reasons to want to be long Apple here. Inside candle breakout, and all of the other things we just discussed. So I kind of like Apple. That would definitely be in my game plan today. So let's shoot out to the weeklies on Boeing. Boeing, again, in my opinion, as a lot of what I've been discussing so far, you would hear me saying a lot that when stocks do this, they should not be in your game plan. You are going to get chopped to pieces. All right, you get one little spike out of it. This is actually an interesting thing too. If it breaks out of a trading range, how long does it stay there? Broke out of here one day, came right back in. So it's interesting because you're going to see me not drawing necessarily the perfect trend lines or horizontal lines, and that's exactly why. I'm more concerned with how long it stayed out of a level, because if it pushes through, it just gives me one print up there, big deal. But this is really more where it stayed. So from a longer perspective, I actually like this now that it's finally pushed through here. So again, pretty clean breakout. We're actually holding. A little different perspective here on the daily. We can see that we got a little bit of resistance. So again, as we're bouncing and looking good, how much room is left in the trade? That's the key. You could want to be long, but what's left in the trade? You got some pretty decent resistance here around 153, and then a lot of resistance at 156. So if you want to be long here, you have to know if you get a higher opening here and the stock opens up into let's just say for argument's sake 152, not unreasonable considering where it closed. You got $1 profit potential. How much do you have to risk in order to make that dollar? If it gets past the 153, then you have around $3, so the risk reward gets a little bit better. So you got to factor that in when you're looking at your trades. Is it a good trade? Is it a good trade now? Again, awesome to switch up and look at these different perspectives. Look at where we are here. Inside week, inside week. So 3 weeks in a row of inactivity on the just the individual weekly candlesticks. So that kind of confirms that we have limited price potential on a trade here. So again, is Boeing along? Yes. Is Boeing along now? No. We're kind of getting limited upside potential, and that's a huge part of understanding how to trade. All right, what do we got here in CVX? We have a potential ascending wedge here. Again, if you know anything about charting, they're never going to be perfect, but that's pretty clean. You're seeing higher highs being met by a resistance level here right around 107. So what's actually going on here? The 20 is still below the 50. So it's still technically a short sale, which means you're doing nothing. But then you end up getting here on the daily chart an ascending wedge, which more often than not you see it pounding at this level and ends up popping through to the upside. So you have a potential change of trend. You also have 3 times, give or take, that it hit this level. Again, really good example here of it pushing through and not staying there. Good volume on the bounce, not surprising that it bounced up there. So this stock is really a do nothing on the daily chart because you have a potential change of trend to the upside. You have triple bottom here, relatively $100.50, and an ascending wedge to the upside. So a lot to not do because the short side, decent potential, quite honestly, because just knowing that there's $100 level of support. But if it bounces, you're getting long early because it's not an uptrend yet. So if we shoot out to the weekly charts, we see kind of the same thing. Again, reversal candle followed by inside candle, followed by a little bit of a breakout, which is what we're seeing here on the ascending wedge as well. And then in the weekly charts, again, confirming the downtrend. That's pretty solid, right? There is no reason to be long here other than maybe you think oil prices are going to bounce. But then what are you doing there? You're guessing. You're guessing what's going to happen next. Just pay attention to what is happening. You could probably find some better opportunities. All right, let's start out with the weeklies on IBM. A whole lot of nothing going on. Pretty big gap down and sideways. Not much going on there. Same thing on the weeklies. You can see the 20 and the 50 are pretty much sideways. Maybe the 50 is going up a little bit, but that's mostly because of this 4-week rally, 4-day rally here. But overall, not much going on. I mean, this price chart is. Can you look at this chart and say buyers or sellers are definitely in charge? Absolutely not. Shooting out to IBM on the weekly candlesticks. Reversal candle, almost an inside candle, definitely an inside candle. Whole lot of nothing going on here. All right, shooting out to Microsoft. Going out to the weeklies, drawing a trend line. Let's start it from here. Seems to be where... Okay, we have a potential change of trend here in Microsoft. Not technically a clean head and shoulders pattern, however... Once you break the trend line, now you have to start drawing your boxes. And if you don't use old school charting, like I'm doing right now, I highly recommend it. And you can even do it exactly what I'm doing, where I'm jumping around through time frames using different indicators. Because when you get the same signal, multiple ways of looking at it, like we saw in Apple, that gives you conviction. But the point I want to make here about drawing old school trend lines is it really puts you in a manual methodology where you're interacting with the charts instead of moving average, moving average, moving. It doesn't make a difference. When you're doing this, you're actually a little. Oh yeah, look, it's actually bouncing between that level. I got to set an alarm for 39.90. If it breaks 39.90, that's the next level I got to look at. All right, shooting out to the dailies, we're probably going to see a little bit of a crossover, and yep, we did. Broke down there, which was the push down that we saw in the weekly. Clearly a short sell. Clearly just a question of where you're getting short here on the dailies. So we have an interesting picture here. We have a potential change of trend, and I say potential because this is the first time it broke. And good technical analysis, when a trend breaks or a breakout occurs, the longer it stays outside the range, the greater the likelihood of follow-through. And now we're seeing 1, 2, 3, 4, 5, 6, 7, about 10 days after this big push down, which we see was a gap on the weeklies, on the daily there. Okay, so even though yesterday was a relatively good day, I would still prefer to be expecting that this is going to end up rolling over. Okay, it's kind of in a phantom zone right now, but you can't ignore this big push down. There's definitely a preceding uptrend, but we've cleanly broken the uptrend and are consolidating now. So I would be leaning more towards the short side. The more conservative trade would be wait for it to break that 39.90 level, 34. And on the weekly charts, just the individual candlesticks. Not really anything going on here. We're kind of alternating red and green candles other than these two down ones here. Caterpillar, we start out on the weeklies. Pretty good, solid downtrend. Interesting, we broke through what was support here, and we appear to be holding it. So let's actually zoom out a little bit longer and see what we got here. Oh, look at that. Wow. So this level has been a pretty big level of support for Caterpillar for a while. If we're going all the way back here, give or take 86 area. And we're kind of, not 86, I'm sorry. 78, 79. So it's basically the $79 range here, 79 to 82. We've clearly pushed below there. I do like it if we get a momentum move down and then a pause, but it's tough to bid into the support where it's been holding up for a couple of years. However, unbelievably important to look at multiple time frames here and see whether or not significant reference points are existing, and this is where buyers have stepped in multiple times. Are we below that level? Yes. Can you lean on a short here? Well, let's look to the higher time frames. We're definitely on a short sale here. And what do I say definitely? Because it's not more complicated than the 20 being below the 50 or above the 50. You're only looking for short sales here. Only. That's it. If we zoom this out a little bit, we could probably get away with drawing a descending wedge here. Very similar to the opposite side of what we're looking at on the ascending wedge, and these usually break out to the downside, especially in the direction of a trend. You can get these patterns without a trend, but when you get a nice clean trend like that, you can anticipate price action moving in that direction. But again, going back out to that little longer time frame that we're looking at on the weekly, this is pretty big support. But the longer we stay below the support, I'd be looking for a fuel candle or a large green candle with volume, and then going all the way back here to 2011 around the 67.50 level. All right, Exxon Mobil. Let's go out to the weeklies. Looking very similar. If we do our old school trend lines here, we are clearly trending down. Obviously, the sector is in the news. I mean, not a question about that. Going out to the dailies, clearly the 20 is below the 50, and we are consolidating below after a push down. Only one big candle there in the middle. Everything else is red or indecision. So still a lot of, wow, even though price has not traded, moved a significant amount, look at how often this stock has closed below the open. Any kind of old school trading cliches, for lack of a better way of putting it, sellers control, institutions control the close. Absolutely saying that. Look at how often that stock was red. That is institutions covering that up, man. Wow. All right, so pushing down out to the daily candlesticks, we're seeing a lot of indecision. So we have good pushes down, fuel candlesticks to the downside, large bodied candles with good volume. And I saw that on the other chart. Indecision, small body. Inside candle, indecision, indecision. So a lot of indecision here, nothing telling us you'd want to be long. I'd still be looking short here. So that's only 5 stocks. I mean, you could go through them very, very quickly, but I just really wanted to more give you the idea of starting out in the higher time frame, which in this case here is the weekly. And if you want, you can go out to the monthly. Depends on how long your swing trading time frame is. But for day traders, we're usually pretty solid with starting out with the weekly and daily chart. And again, old school trend lines on the weekly, looking for patterns, bigger pictures, and looking for longer term support or resistance levels. Zoom it into the daily chart using simple 50 period moving average, exponential 20. Don't make it complicated. Is the 20 or 50 above or below? Is it slightly rising, aggressively rising? Is it sideways? Keep it simple. It's above or below, or it's not. It's declining or rising, or it's not. Keep it simple. So 2 different ways of looking at the same picture. Higher time frame because you're using moving averages over a longer period of time. And then just individual candlesticks looking for either solid and follow through, or are we consolidating with inside candles or indecision? Again, just the vernacular. Inside candles mean a small body, which shows indecision from the high to the low over that period. So over a week, now again, today's Tuesday, so it's only yesterday, but last week, 5 days of price action, opened and closed in essentially the same place. Look at how many times it did that. So that makes for some tough trading. These are the kind of weeks you want to notice to be an aggressive day trader, where you have a weekly candle, and you're still continuing to trade higher off of the open relative to the close for that week, and then that's when you could jump down to the daily candles and be aggressive on your intraday entries. All right, we'll continue to do some more of this kind of stuff, but I want to give you an idea of a good, professional, consistent way to get time frame confluence, or I guess a better way to say it is seeing the same thing with multiple charts in multiple ways to get conviction in your ideas, to game plan only one side of a stock, or to decide to do nothing, because even though it could be a good idea, there might not be a lot of potential in the trade. If there is potential, then you put in your game plan, and we just went over, okay, this week it's either red or green, and I'm going to continue to do that if it's in the direction of a higher time frame.